Hey there, everyone. Welcome to another episode of the Whole Home Show. I'm Tony Joe. I've been your host here every week for the past 6 years, bringing you tips, education, and updates on home related matters. You may be in the real estate market, or maybe you're just looking for ideas or things to do around your house. And if so, this is a great place for you to be. Our show comes to you every week with the support of our show partners: Denise Webster, mortgage broker with Dominion Lending Center's Modern Mortgage Group; JP Sellez, insurance advisor at Westland Insurance; the Sitka Law Group for your real estate, wills and estates, corporate and personal injury needs; and Silhouette Building Inspections with Pierre Beauvais. If you need help or direction in your real estate transaction, give any of the Whole Home Show team members a call. They would love to hear from you. It's my pleasure being here for you every weekend. We are at 320 some odd episodes right now. So many great guests and always a lot of fun. However, this is my fun job. This is not my day job. I do help people with their real estate needs, and I have done so since 1991. I've helped thousands of people here in Greater Victoria, all over the map, Souk to Sydney, the entire capital region district, and all different types as well too: first-time buyers, investors, estates, trusts, tenants. All of these things I have had the pleasure of working with over the years for my clients. If you would like to have a second opinion and want to chat about your real estate needs or things that are coming up for you, if there's a move in the near future for you, for instance, feel free to reach out to me. I would love to have a chat with you. You can find my contact information and the rest of the Whole Home Show team by visiting cfax1070.com. You look under shows. There you'll find us, the Whole Home Show, with me, Tony Joe. All of our contact information is there, or as I always say, reach out to me. I love hearing from you. I love hearing from our loyal CFAX listeners every week. You know what I love even more, though? I love bumping into people either at the grocery store or out for a walk with the dog. I'll have people say, "Hey, I listen to your program every weekend." I love that. I love it because it means that we're doing something that is helpful and useful in the community. And I really appreciate the feedback. It really gives us the drive to continue doing this because we're having fun. Myself and all of the Whole Home Show team members. Speaking of which, we're going to be talking with Denise Webster today. I always have fun talking with Denise. Really, it's really more of a conversation. It's a chat between Denise and I'm always wanting to learn things about what's happening out there in the mortgage world because, hey, folks, a lot of stuff going on right now. I'm sure you'll agree with me on that. And it's always great hearing from her. So today's episode, we'll be chatting with Denise about things that are happening. Interest rate announcements, of course, they're happening every month now. Not the month of November, by the way. It's we've got a few more announcements for the rest of 2024. So it's always interesting to know how it's going to affect consumers, including yourself, for instance, if you're thinking of buying or selling in the near future. However, we always start off having conversations about timely matters, things that you, our listeners, have brought up, would like me to cover. There's a few things that I would like to chat about right now. Just a little follow up and update. I had mentioned in a recent episode that there are some changes happening in regulations in the States, in the United States, the National Association of Realtors. You may or may not remember, maybe you didn't catch that episode, but I'll give you a quick little run through right now. There was a court case. There was a class action suit that occurred a little while ago for realtors, real estate companies in the States. And it has prompted changes in the way real estate is being done. August the 17th of 2024 was a pivotal date because as of August 17th, realtors were no longer able to post cooperating remuneration. That's for instance, commissions offered to buyer agents on properties. They're not allowed to post it on MLS. I did discuss this, like I said, a few weeks ago. I did mention that does not mean that there is no buyer remuneration. That does not mean that sellers either don't want to pay that or won't pay that. All it means is that the licensed realtors are not able to post it on the MLS system anymore. So it's been a couple of weeks now so far. And as you guys know, I keep an eye on what's going on in our industry, in the real estate industry, all over the place. And I've been keeping a keen eye on what's going on in the States. Yes, there's been a lot of fear. Whenever there's a change in any sort of regulation, any industry starts having fears, concerns, things like that. There was a lot of conversation about agents, buyer agents, only working with buyers under buyer agency contract. So you imagine that if you're thinking of buying a home, what that would mean is an agent, say either your favorite agent or some agent that you're working with, they will only provide service to you if you have a signed service agreement that basically states that you are using them exclusively. And it also means that they have to provide you with a certain level of service that is outlined in the contract. By the way, folks, that does exist here and it has for many years. I have brought that up before on our program here. Many agents work under buyer agency contracts with their buyers anyways. That's nothing new. That's absolutely nothing. It's been around since I've been around, 30 some odd years. However, in the States, it has prompted them to start working that way. And one of the reasons is because agents, this is their profession. It's what they do. It's what they do for a living. They just want to ensure that when they're working with someone, that there is the reasonable expectation of getting paid for their work. And, you know, that is fair. Whatever that amount is, by the way, we don't talk figures, we don't talk numbers. All of these figures are negotiable. They're not set in stone. The Competitions Bureau prevents that from happening again. I mentioned that before. However, here's the interesting thing. I mentioned to you that they're no longer able to post these things on MLS. That doesn't mean that realtors are not finding creative ways of announcing this, because of course, as in any other industry or perhaps human nature, people are always trying to find ways around regulations and rules. There was a picture out there on the internet, pretty sure it was legitimate, you know, as in not AI generated, where a home seller with a house for sale actually mowed into their lawn a percentage amount of what the seller was willing to pay buyers agents for bringing buyers to their house. That was very funny. Like the number was huge. Like when you look at the yard, I don't know how he figured it out, but that it had to be, you know, 20 or 30 feet in size. That is one way they're doing it. Another way they're doing it too is they're pricing properties in quote unquote code. So let's just say, for instance, a property is $700,000, $699. You know, usually it's $699.9. Well, some agents are going 699,030 or 025, meaning 3% or 2.5% being paid to the other brokers, or whatever the number is, right? So agents are getting used to seeing properties that are, you know, for instance, 999,030. That's code. So interesting to see where that brings things. The other thing too, again, this is a follow-up. It was a class action suit. Many brokerages paid millions of dollars. One of the biggest questions always being, where does that money go? Did it go to consumers? Did it go to sellers? No, it didn't. In fact, the beneficiary, the fellow who started the class action suit, get this, started up his own real estate brokerage recently. And it is a sort of a la carte real estate system down in the States. So there you go. That's a case of a legal suit basically funding this fella's new business venture. It had nothing to do with benefits for the consumer. It hasn't changed the way things are done. You know, there was always that thought that, well, if we don't need to pay buyer agents anymore, then, you know, we could offer the house for cheaper, or buyers would be able to get a house for cheaper. Well, let's just get this straight first. Sellers are not going to sell for cheaper because of that. All they're, if they're only offering the seller's commission side, then so be it, right? But anyways, just want to give you a little update about what's going on there. One last thing I want to talk about before we have our break. There was also the report of that realtor in Markham, Ontario, who was found murdered. These are not, these are scary stories. These are things that do happen. This industry can be dangerous in that people call us out to show properties or homes or whatever, strangers that we don't know. Of course, our hearts are broken for her family and everyone around her. This happens too often. As you guys know, it happened here in Victoria back in 2008. That's when I was the president of the real estate board. Just be careful out there. My real estate friends, all of you who are listening right now, be sure you take precautions. Tell your friends and family where you're going to be. And for goodness sake, do not spend time with strangers. Make sure you know the people that you're going out to have a look at properties with. Anyways, need to take a break here, folks. We'll be back to have a conversation with Denise Webster. Back in a moment. Thanks for coming back. You're listening to the Whole Home Show, and I'm Tony Joe. Always interesting thinking about what's happening out there in the world. I mean, first of all, you're listening to this program. It's a real estate show, obviously. So we talk about what happens in the real estate market and what's happening locally here in Greater Victoria. But one of the biggest aspects, of course, is the influence of interest rates and mortgages on people's purchases. And of course, who better to have to discuss these things with us today on the program than our own intrepid mortgage advisor, Denise Webster from Dominion Lending Center's Modern Mortgage Group, one of our show partners and supporters pretty well since day one. And of course, she's a regular voice here on the program and someone I know that many of you, our loyal CFAX listeners, reach out to on a regular basis. Denise, thanks for joining us today.
Thanks, Tony. It's really good to be back.
You know, the biggest piece of conversation that seems to come up is the fact that the Bank of Canada has been, let's call it toying with the overnight lending rate recently. Let's talk a little bit about that. We had long periods of increases and then holding, and then we seem to be in a different phase right now. So let's chat about that.
Yeah, I mean, felt like a solid year of just every bank announcement you thought there was going to be a rate hike, and it kind of worked out that way. I think there were 10 increases over that year. So really uncomfortable for clients that had those floating rate variable mortgages. They saw their payments increase and increase and increase, and there felt like there was going to be no stop.
Mhm.
And now, the tune has changed, and we're just waiting to see how much the Bank of Canada can bring down that overnight lending rate. And the decreases have started. We've had 2.25% decreases, and now we're looking at three more rate calls for the rest of 2024. So Bank of Canada looks at this overnight policy rate 8 times in a calendar year. So we've got three left this year with strong predictions of further decreases. And that's all data. It's all based on what data comes in about the Canadian economy, and how that data reports is how the Bank of Canada has to adjust and see if we need to trigger consumer spending. So if consumer spending's stopping and slowing and flat, the economy is flat. And so the only thing the Bank of Canada can do is lower interest rates, which was the reverse. When the inflation was really, really high, the only thing the Bank of Canada could do was increase rates to stop the spending. So it's a yo-yo.
Mhm.
Um, and we'll just have to see what happens. I think, we can all make our predictions, but until you really see the data come through, and we had the data in August here, so there is a strong prediction for a further decrease in this next call.
In many ways, it's kind of like the brake pedal and accelerator in your car, right?
Yeah, there is.
Yeah, so the bank has these two pedals to influence the outcome of the economy here. I want to go back to the first thing that you mentioned a moment ago, and just going back in time a little bit to all these folks that had variable rate mortgages and the interest rates were going up. Now, this is always very interesting speaking with you because you're right in the middle of this. You're the person that is talking to these consumers whose interest rates are changing. Like they seldom call me. They don't call their real estate agent, right? It's always the mortgage person. So let's just go back in time a little bit and tell us about, what kind of calls you were getting at that time. What were people saying? Was
Oh,
it
do I have
was
to
it
go
high
back?
panic?
Do I have to remember that? Oh, it was
I'm
awful.
sorry. I got to bring
Yeah,
you back because our listeners got to know like
yeah.
what was it like? Yeah.
So 2022 was a really rough year. It started in, I think the first increase was March 2022. And so, yeah, 2022 was a really rough year. It started in around March 2022 was the first increase, and
Yep.
it never stopped. And some people had just got into their mortgages in a really low variable rate mortgage, because that prime rate was at 2.45 with discounts off of that rate.
Mhm.
So suddenly they just got into a mortgage, and they saw the first increase and the second and the third.
Okay. So the timing is key here because you said about March 2022. When we look at the average prices of properties, the
Mm,
all-time peak, the highest the average sale price has ever been was March 2022.
interesting. Yeah. And then everything started changing pretty drastically because the news was grim.
Yep.
You know, the Bank Canada changed their tune, and the reports coming out were just saying, this is all rates are going to go up. They're going to go up. Whereas just previously, the message that was being sent by the Bank of Canada was that rates were going to stay low for the unforeseeable future, and it was a
Yes.
great time to purchase real estate. And it really did put a few people in a bad position because they were purchasing at very high purchase prices in 2021. 2021 was the message that rates were going to stay low. And as a broker, I mean, we were really listening to Bank of Canada. We were trusting that news as well. And a lot of, I am not alone in this. Most people took a variable rate in 2021.
Okay.
So it was a really rough ride. Some people locked in. It was a very hard decision to go from your floating rate to lock into a fixed rate because that fixed rate was a big jump at the time compared. So you were taking an instant hit by deciding to lock in. So the conversation happened every time with a lot of my clients. So every time the rate went up, they're like, how about now? Should we lock in now? I'm like, okay, here's your lock in option. What do you think? And they're like, no, it doesn't make sense. And it just kept growing and growing.
So, just as an example, could you throw kind of like rough numbers when you say it was a big jump? What was?
So some people were at a rate of, prime was 2.45. They had 1% discount off of that. So their interest rate was 1.45.
Yeah.
And they were being offered probably about a 3.2 was their
Oh,
lock-in rate, which
oh,
sounds great now in hindsight. But at that time,
yeah.
we're like, why would they go from 1.45 to 3.2? And if there had been a crystal ball, yeah, heck, we would have all locked in at 3.2 to get through that year and a half, two
Mhm.
years.
I think the important thing to consider here is that none of us saw it coming because you just said that uh, people were buying with this thought that things were going to be stable for a while. I can think back to that time. I had people, in fact, I have one family in particular I can think of right now. They bought their dream home at that peak
Yeah.
and that was the time where people were buying first and then they go, okay, now we're going to sell our house because we know we can sell it. It's not going to be a problem. We can cash, all that. But it was at that point in time where the Bank of Canada pressed that brake pedal
Yeah.
and
Or
I'm
acceleration.
oh yeah. And I was not alone in having clients like this who had committed to this bigger house and suddenly was struggling to sell the lesser house because of what had happened. So, oh yeah, you're bringing back memories for me too,
I
right?
know.
Yeah,
Yeah. I feel lucky for the most part. I mean, I had some really hard conversations and I had a lot of repeat conversations with clients, just like, heck, we don't know what to do. I am just as stumped. I'm in a variable. I never locked in my mortgage and still to this day, still riding it out.
yeah. Um, do you recall people getting in serious enough trouble where maybe they lost their houses or they had to give them up?
Personally, no, I did not have any clients go into foreclosure.
Yeah.
I'm happy to report that. And, maybe there were, and I don't hear about it because it might have been too personal for them and they might have just dealt with their lender.
Hmm.
But, for the most part, we're not seeing a lot of foreclosures. It's
Yeah.
such a low rate here in Vancouver Island and Canada. Like
Hmm.
Canadians pay their mortgages.
Hmm.
If anything, if you start to read the reports, where the problems are lying is the consumer debt. Canadians are great at making their mortgage payments, and they will risk the penalty of not paying their credit cards in time, but they'll
Okay.
pay their mortgages.
Well, listen, there's a lot more to unpack here in discussion. We're having a chat today with Denise Webster with Dominion Lending Center's Modern Mortgage Group. We're talking about the past. It's painful for both of us, right? Your phone number, people need to reach you.
250-889-4743 or an email to denise@denisewebster.com.
And of course, folks, her contact information is on cfax1070.com under the whole home show. You'll find it there. Need to take a break. We'll be back in just a moment. Thanks for coming back. You're listening to the Whole Home Show, and I'm Tony Joe. Our show comes to you every week with the support of our show partners: Denise Webster, mortgage broker with Dominion Lending Center's Modern Mortgage Group; JP Sellers, insurance advisor at Westland Insurance; the Sitka Law Group for your real estate, wills and estates, corporate and personal injury needs; and Silhouette Building Inspections with Pierre Beauvais. If you need help or direction in your real estate transaction, give any of the Whole Home Show team members a call they would love to hear from you. You can listen to all of our past 320 or so episodes by visiting iTunes or Google or wherever all fine podcasts can be downloaded. There's so much great information over the past 6 years. Maybe things that weren't relevant to you at the time when we aired it, but they are now. We've had conversations with trades and service providers and learning experiences about things relating to real estate. Very, very handy. You can find all the information there. You can also go to the cfax1070.com website, and when you look under the Whole Home Show with me, Tony Joe, they also have their posted the most recent episodes as well too. So no shortage of great information. We're having a conversation today with Denise Webster, of course, our mortgage specialist and expert here on the Whole Home Show. Again, Denise, thanks for joining us today.
Thanks, Tony. It's a good conversation.
You were talking just before the break about consumer spending because I asked you the question whether you knew of clients that had lost their houses or foreclosed or anything. I asked that question for a reason, and it's because I maybe I read too many of these consumer discussion threads and stuff like that. But often there's that discussion of, oh, the rates have gone up, people are losing their homes left, right, and center. It's going to cause prices to tumble. I can't tell you how many consumers, maybe well-meaning, but definitely not well-informed. They often
Mm,
say, I think prices are going to dump 30% or 50% because prices in Victoria are too high. Not the case here, and especially considering we just weathered these, was it 8 periods of increases, right?
yeah, yeah.
Um, but anyways, as you said, people aren't losing their home, but they are racking up consumer debt.
Yeah, things have shifted, right? They had to change their spending habits. I think one of when I say that data is really important on how the Bank of Canada is making decisions and how rates are moving. Um, if you think about unemployment rates, and so if you want to, I'm not an economist, but I try to break it down and really help my clients
You follow
understand.
some great economists,
I
though.
do, right?
Yes,
They're
yes,
smarter than me. They know what they're
yeah.
talking about. But then I've learned so much over the last few years.
Mhm.
But the data is so important. And so we're watching things like, well, obviously the inflation rate was number one. That's all you heard about. But really, we also had to keep our eye on the unemployment rate. We had to look at retail sales. So these things are having the impact on the overall spending of Canada. So one thing that was really, it's hard to pinpoint, but that unemployment rate was not going up. And they said all these new jobs were being awarded. And I'm only talking Canada right now. But really, if we were to drill down, there was a lot of new jobs, but they were part-time. So you think about that, a lot of people were getting second jobs.
Mhm.
So there's the shift of how do we keep paying our mortgage at these high interest rates? Well, I'm going to go get a second job. So that data was really hard to put into perspective when you're saying, well, we're not losing jobs, we're gaining jobs, but they were a lot of part-time jobs. So you break that down and you say, okay, well, we survived. This is why inflation still wasn't coming down because we were not reporting high unemployment rates. Retail spending was still happening. And this is just the most recent shift as of like last Friday. The retail is really flat right now.
Mhm.
So that's what's really probably pushing the Bank of Canada to make their decision. Obviously, inflation came back down. Back on August 20th was the report. Retail's flat. So we do know that the Bank of Canada is going to have to make a decision on Wednesday, and we will see. It's pretty darn sure we'll see a quarter cut.
Well, and it's funny. People are also saying, "Oh, maybe it's going to be more than a quarter. Maybe it'll be a half. Who knows?
Who knows?
Maybe, yeah,
Maybe nothing.
maybe it's time to make friendly bets or something.
Yeah,
Whatever. But however, it seems like the overall agreement is they're not going to be going up, right?
exactly.
Yeah.
And if you bear with me for another little blurb here, I think one thing that I get over and over again is when these Bank of Canada policy rate calls are announced, the 8 times in one calendar year, I get a lot of people that will email me and say, "Hey, the Bank of Canada is going to drop rates." They're reading the headlines as well. Will that change my mortgage? And they have a fixed rate mortgage. So there's a lot of lost in translation kind of communication between the media and clients really understanding the difference between their fixed rates or their floating mortgages, variable rate. So even when I have somebody that's got an approval waiting to fund, they've got a purchase and it's going to close in a couple of months. They've taken a fixed rate and they will call me and say, "Oh, my rate's going to change, right? The Bank of Canada is making an announcement." So it's a conversation I have over and over again, and I like to reiterate. So when we hear these announcements, I want everybody to understand that that is immediately affecting people in these floating rate mortgages. It's the overnight policy rate, the rate between which banks exchange funds. That trickles down to change how the banks change their prime rate, which is the mortgage rates. So when the bank makes the announcement, then the Central Bank of Canada makes the announcement, then our lenders make their changes to the mortgage rate. And that will affect people in a variable rate mortgage. How it affects fixed rates is just an overall message that's being sent out about the Canadian economy. So if we think rates are coming down, it triggers a bit of insecurity about the economy. And so that can trigger our bond rates to go up, right? They're going to try and motivate people to buy in the bond rates. So the rates go up on the bond rates. That triggers fixed rates to come down. It's very confusing, but
Mhm.
if that yield between the return on those bond rates is coming down, so is fixed rates.
Okay.
So it's a delayed reaction, I find. I try to explain that. I say, yes, when the Bank of Canada makes announcements, we could see some changes to fixed rates following. It's not an immediate thing. And so I always just kind of keep in touch with my fixed rate clients that are pending their rate. It hasn't been settled. They haven't funded their mortgage yet, and say, yes, we could see some further rate decreases. So I'm happy to say we are in this phase right now where I get to make some really nice phone calls and call my clients and say, your rate has dropped. We
Yeah.
just got another rate drop. So it's a nice time to be back in the business.
Yeah, very important message to give because there is a delay. And I do believe that there is a misunderstanding with consumers in general. They think that when the Bank of Canada makes this rate announcement, that it instantly changes wherever they're at mortgage wise. But as you've just explained in great detail, there's a lag, right?
There's a lag. Even with your variable rate mortgage, if it happened on the 3rd of the month, I'm just throwing a number out, your mortgage payment might not change until the following 1st of the month. It's not that day. It
Yeah.
depends on how the lenders calculate it. So that's something we watch for as well.
Yeah.
And if I had to kind of put myself out here on the ledge and make a prediction, um, I think one thing I really have been discussing with my clients is where we're at with fixed and variable rates is a very different time right now. For my career as a broker, when you looked at a 5-year fixed rate and a 5-year variable, the 5-year variable was always lower. It was kind of like enticing.
Yeah.
And I always had to explain to clients, yes, it's a much lower rate. And yes, it looks appealing compared to the 5-year fixed rate, but it comes with risk. The Bank of Canada can change this as a moving rate. So that's conversation is the career of my as a broker. It's always been that way.
Mm.
So since prime rate has skyrocketed, you look at a 5-year fixed and a 5-year variable, the 5-year variable is much higher than the 5-year fixed.
Yeah.
It's not normal.
Yeah.
So I really do believe the Bank of Canada's job right now is to bring down that floating rate and get back to a time where that 5-year variable with its discounts is actually going to be a little bit lower than the 5-year fixed. So
Mm.
what I'm getting at is I don't think our fixed rates are going to be moving too much. They're doing this.
Yeah.
They've been going up and down for the last year.
Okay.
Um, but the Bank of Canada has a job to get down the overnight lending policy rate, right?
Yeah.
So that
Yeah.
we can actually see a break in spending, get the spending triggering again.
Oh my goodness. Well, we need to take our last break of the day, having a chat with Denise Webster. She is with Dominion Lending Center's Modern Mortgage Group and an excellent mortgage broker here in Victoria. Listen, if you need some help, reach out to her. Need to take our breaker. We'll be back in just a moment. Thanks for coming back. You're listening to the Whole Home Show, and I'm Tony Joe. Having a great conversation today with Denise Webster. Of course, you've heard her many times before here on the program. She is with Dominion Lending Center's Modern Mortgage Group. She is a mortgage broker and advisor, has helped so many clients here in Greater Victoria, not just mine, but many others as well. And I know many of you are loyal listeners here as well, too. Thanks again for coming back, Denise.
Thanks, Tony.
You know, just before the break here, oh, I gotta tell you, what I really enjoy about these little riffs that you and I have is it's just a conversation. And for me, I'm like any other consumer. I'm just curious about, things about what's happening, your realm, all these things you are dealing with on a regular basis, we know nothing about, which is the reason why we like reaching out to mortgage brokers like yourself, just to sort of uh, um, dumb it down is probably the wrong term, but I mean, make it simple so that we can understand, right?
It does. It has to be in simple language. It has to, I try to pride myself in making it understandable. I really want my clients to know what I'm talking about.
Yeah, oh, for sure, for sure. And I happen to know that's why they really enjoy working with you. That's one of the trademarks of Denise Webster. Um, Locking in, because that's probably one of these questions you get on a regular basis now for those people that are in a variable, right?
Well, it was the question of the year for that full 2022 into 2023. That was the conversation I was having over and over again. Should we get out of our variable and lock into fixed? And it's still a trickling in question, but the shift has happened now. So now with all the projections of Bank of Canada lowering overnight lending rate and your prime rate reducing, it would be a crazy time to lock in. Because those lock-in rates, that spread is becoming smaller, which is what I had just said. I think that shift between the fixed and the variable rate has to start to align. So when I look at a client in a variable rate mortgage and they say, should I lock in? And we look at the fixed rate option to lock in, there's not a big spread. And I'm like, well, if the Bank of Canada were to drop another 1/4%, a 0.5%, maybe 3/4%, you might now be on par with that fixed rate you'd locked into.
Hmm.
So why would you lock in now if there could be further reductions? Then
Hmm.
you're suddenly winning again in your variable rate mortgage. So that conversation has shifted now. We're not really talking about locking in anymore. We're talking about, these people, I'm like, you've made it this far. Why would you lock in now? The
Yeah.
shift has started. So you will start to reap the rewards of a variable rate mortgage again. Now, making that decision to do it now and take a variable rate mortgage is still right on the cusp
Mhm.
because there is that spread still. I feel like it's probably by the end of the year, maybe we're a little bit closer to those fixed rate and variable rate matching, and we'll see more people coming back into the variable rate mortgage. Right now, there's still so much uncertainty, I guess, that a fixed rate feels really safe for most people.
Mhm.
And most people are looking at the 3, 4, and 5 year fixed rates. So yeah, I do think by the end of this year, we're going to see a little bit more clients coming back into that variable rate. I've definitely had a handful of clients that are just so sure, and they're like, no, I don't even want to look at fixed rates. I know a variable is the way to go again.
Mhm.
Sometimes
This
I'm like, how do you know more than me? I don't know.
they got a crystal ball, apparently.
They do.
Yeah. This may be a difficult question to answer because of course, it will have depended on the different times and, different periods and all that stuff. But generally speaking, what would you say is the breakdown between people who choose fixed and variable?
What's the breakdown? Well, gosh, I'm 14 years now. I would say that it was almost 75% of my clients were always variable.
Yeah.
It was really high,
Yeah. And,
really
and,
high.
and acknowledging that this changed, not it just
This
changed
big
recently,
change.
kind of
Yeah.
thing.
So if I
Yeah.
looked at my book of business in 2022, it
Yeah.
was all fixed.
Okay,
Yeah.
so it also begs the question, and you sort of just answered it, why do people pick fixed? And it really is just because of that security, right?
Yes. Yeah. And I can usually tell a little bit when I really get to know my clients. You can understand their ability for risk. You can their tolerance, right?
Hmm.
I love this question, Tony. It's so silly, but I will look at a couple and I'll say, when you guys are in your car, who drives till the gas light comes on? Who fills up halfway at empty or half full?
Hmm.
And if they say, oh, gaslight was always on, I'm like, well, you're a variable rate mortgage.
Risk taker,
You're risk advert. Yeah, you don't
a risk
care.
taker. Yep.
Yeah, yeah. So it's a funny conversation to have. But at the end of the day, I really say, are you going to pay attention to the media? Are you really going to be listening to what's happening? Or do you want to just turn that off and just ride of your mortgage and not have to be concerned about what's going on? A lot of people will choose that option. This is our first time owning a home. It's our first mortgage. You know what? I think we just want to settle into a payment. We know that payment's there for 5 years. We're happy with that. Whereas others are just really in tune with the global economy, and they want to say, you know what, they'll make a decision. I have to present both of them, and I have to educate them on that decision, and then let them make the decision of what feels best for their life.
Yeah, so for those who want that fixed rate and know that their payment is consistent throughout the entire 5 years, the other thing as well is they're going to know, actually, you can show it to them. They're going to know at the end of the 60 months, the 5 years, what their balance will be because it's all laid out black and white, right?
Oh, that's part of my closing package. I actually show them the amortization schedule, show them
Oh,
exactly where your payments are going and what it looks like at the end of the 5 years.
yeah.
So quickly, you just brought up a huge topic because this is in the media. This is all you're hearing right now is what is happening at renewal for these people that are coming out of these under 2% mortgages, and they're going to be going into a 4 to 5%, new mortgage rate. It is scary. And I think that's why Bank of Canada has to make some of these decisions, is because if you look at the portfolio of the number of mortgages that are coming up for renewal in 25 and 26.
Hmm.
So if you kind of look, so 21 was that year, and most of those people took a 5-year fixed. So all those mortgages are coming up in 2026.
Hmm.
And it trailed off in 2020, those rates came down too. So those are coming up in 2025. Then 2022 hits 2023, and most people start to take a 3-year fixed rate, thinking, oh, rates are coming down. I'm going to take a shorter term, get into a lower rate sooner. So all those 3-year fixed rate mortgages are also coming up in 25 and 26. And these are all very low rates, like most of them were under 2%.
Hmm.
So the media will tell you right now that shock payment is going to hurt a lot of people.
Hmm.
So how do we navigate that? And I think that's why there is a lot of pressure that rates have to come down, because 25 and 26 is going to be really difficult for some people, especially if they bought at the height of the market, at the height of their qualifying amount, right? If they pushed the envelope and took a mortgage payment that felt like they could handle at that rate,
Hmm.
but not a lot higher. I mean, the stress test definitely protected a lot of Canadians,
Hmm.
but we have surpassed that stress test now.
Hmm.
So most people were qualifying at a 5% stress test back in 21, 22.
Yeah, because as a reminder for our listeners, it was 2%. So,
It was the benchmark rate, which was 5.25,
yep.
or your interest rate plus 2%, whatever was higher. And at that point, the benchmark at 5.25 was higher than
Yeah.
their plus 2%. That shift now, you look at a 5% mortgage rate today, qualifying at 7% now.
Yeah.
So the
Yeah.
stress test is hard. That's why a lot of people can't qualify right now as well. Rates are high, and that stress test puts 2% higher on it.
Yeah. So,
So
but as you mentioned though, the stress test ultimately ended up being a nice little safety valve for a lot
sure
of
did.
consumers, right?
Sure did. Yep.
Yeah. Now, getting back to what you were talking about with these people who are having to renew their rates, I suppose the good news is that as painful as it will be, it's not like it's a surprise to them because they've been looking at this for the past year. And
Yes.
and
Yep.
knowing that when this happens, that the numbers will look different, right?
Yeah. So this is the majority of my work right now, is really looking at my clients that are coming up for renewals, and we're having these conversations and letting them know what their options are. You can negotiate the best renewal rate with your existing lender, look at the terms they offer, 3, 4, 5 years, variable rate mortgages, and they bounce it off of me. Just, Denise, is this a good rate? Should we sign this renewal? And I'm happy to be that sounding board for them, because it is just sign on the dotted line. Your mortgage is not going to be called. If you've paid your mortgage as per the terms, that lender wants to keep you as their borrower. They want your business. They want you to renew their mortgage. So we just have to make sure you're getting the best renewal rate. And
Mhm.
then we also can have that conversation. If that payment, there is other options. Like, we can move your mortgage. We can refinance it, re-amortize, go back up a little bit to make it a more good monthly payable that's a little bit more manageable.
Yep.
There's a lot of options. I don't want people to be panicking about 25, 26. It's a conversation I'm having with clients already, trying to prepare them. Hey, it's not as bad as you think. I run some numbers for them and I show them, even at 5%, this is what your payment would be if we did this. And for the most part, my clients are like, oh, it's not as bad as I thought it would be.
Okay, because and this is another good point that you brought up, with the sign on the dotted line, because I think there's a fear as well too with consumers that, oh my God, the renewal might push me beyond qualification and the bank's going to take my house away.
Not the case. No,
Yeah.
unless you've been terrible at paying your mortgage and you've had NSFs and you've missed mortgage payments, they might not want your business back. But if you've been in good standing with your lender, they are offering you a renewal and it is signed on the dotted line. They're not coming to call the
Yeah.
mortgage on you.
Yeah. Yeah.
No requalifying. They're not pulling your credit.
Yeah.
If you've got good standing with your lender, you are signing on the dotted line as soon as you decide that that's the rate and the term you want to move forward with.
Well, and I want to make this announcement too, by the way, for our listeners, and many of them already know this as well. This is what makes Denise very unique, is that if you are faced with this whole mortgage question, you can feel confident approaching Denise and asking her these questions because she's not going to try to sell you or shoehorn you into something that you don't need just for her to earn a commission. That's not the way that Denise operates. I know this because we've had people that have said, "Oh, Denise, we talked to her. She was great. She gave us her time, and we ended up staying with the bank." And I think that is an amazing service. You're such a person of high integrity, and it really makes a difference. And that's one of the reasons why we love having you around here.
Oh, thank you very much, Tony. It's just the right thing to do. It's as simple as that.
Yeah. So, and as we're on that, folks, if you need to chat with her, Denise, your number direct again.
250-889-4743 and an email as well always works. Denise@denisewebster.com.
Of course, her contact information is on our webpage on cfax1070.com. It's under shows, the whole home show with me, Tony Joe. As you've heard in the past hour here, Denise is such a fantastic resource for any of you. She is one of the sources that I reach out to whenever I have confusion about things. There's a lot of confusion because mortgages are confusing, but you know what? People like Denise make it simple, make it easy. Denise, thanks for joining us today.
Thank you, Tony. Great to be back again.
And to all of you, our loyal CFAX listeners here at the Whole Home Show, thanks for joining us today, and look forward to having you listening here this time next week. See you soon.